Many of the most popular top calling Bitcoin metrics didn't work in this bull market. Does this mean that the data is broken, and can we rely on these charts going forward? So we'll get straight into it here on the price forecast tools indicator we have here on bitcoinmagazinepro.com. Now, if I just zoom in, what we can see is over this current bull market, we didn't get anywhere close to these reliable, well, historically reliable top calling indicators, such as the delta top, terminal price, and of course the top cap, which we didn't even reach last cycle, so we can maybe exclude that one. But this isn't the one metric in isolation. If we look at something like the Bitcoin investor tool, we can see we've got nowhere near to this 2-year MA times 5. And of course, if we look to the pi cycle top indicator, one that many were looking towards to potentially help time not only when the Bitcoin market peak would occur, but it potentially give us some indication of the price it may occur as well when looking at the deviation above these two moving averages at the point of crossing. So does this mean that the data is broken? Can we rely on these metrics going forward? Well, one thing we need to acknowledge is, of course, Bitcoin is an evolving asset. It's changing. And because of that, we need to maybe tweak our analysis to look through a slightly different lens at the market. Now, of course, it's easy in hindsight to say, yeah, these didn't work, we should have used these instead. But I think if we try and create slightly more bulletproof metrics and indicators that kind of evolve with Bitcoin's evolving market dynamics. So if we look to the MVRV score 2-year rolling, I've taken some inspiration from this because as we can see at the minute, we're at the most oversold values ever. And again, what we can see is this didn't quite call the bull market peak. It had a major spike as Bitcoin first surpassed about $73,000, $74,000. But then beyond that, again, it didn't really give us a good indication, a good point to potentially start scaling out of our position. So if we just go over to TradingView here, and what we can do is add on this metric here, which is the MVRV score, but rather than rolling on a 2-year basis, it's looking at a 6-month rolling basis. And another thing that I think we should be doing, rather than looking at metrics that are adapting to the changing market conditions a little bit more frequently, is potentially, rather than looking at fixed values for when we need to be accumulating or distributing Bitcoin, is look for more dynamic levels to watch. So this is just a distribution curve. So it's mapping out the likelihood and the percentage of days, the percentile of data points above certain thresholds. So for example, if we were just to put something on around here, which is around 2.28, which would be the top 10% of days, and we'll put another one around here at 2.83, roughly around there for the top 5% of days. And we'll do something similar for the bottom around here, the bottom 5% of days. Now what we can see is during this cycle, Bitcoin did actually give us a couple signals above this as we first surpassed $100,000. And we can see historically it's worked fairly well for calling the market cycle peaks, especially when we've gone above this upper 5% region on this metric. But again, it didn't call the exact cycle peak. And I think one thing, of course, we've discussed it many times on the channel, but one thing we maybe need to adapt and kind of weigh in a little bit more, rather than just looking at Bitcoin priced in US dollar terms. If we look at Bitcoin priced in gold, for example, we can see as this metric spiked to the upside into this upper 5%, the metric has just gone, the line has just gone. But we can see in the upper 5% of regions here, this actually aligned with Bitcoin's pretty much all-time high measured versus gold. And if we just go to Bitcoin versus the NASDAQ, for example, again, a very risk-on, speculative index for US equities, we can see that as Bitcoin peaked in the second cycle, this double top cycle, it actually first set its all-time high in terms of raw purchasing power in this first double top, which this metric would have called fairly accurately. But of course, as I said, it's easy in hindsight. There are actually some indicators that we can look towards to, again, give us some indications of when the market was going to peak, or potentially when we should maybe been a little bit more defensive as Bitcoin was approaching new all-time highs. Now, as I said, it's easy to look back in hindsight and say, of course, this would have worked. And as I've said a million times, it's better to react than predict. But if we look at something like the coin days destroyed metric, which is looking at the 90-day moving average of the coin days destroyed, but actually change that to look at the 30 days, again, be a little bit more reactive in the market. We can see because of the change in market conditions, Bitcoin isn't having these big exponential moves to the upside like we historically have seen. It's a much more muted, a lot more choppy and consolidationary with much more diminishing volatility. So we maybe need to account for that by adapting our metrics to work on a slightly more faster, short-term basis. And what we can see looking at the coin days destroyed, if we just exclude the current reading that we've had here to look towards the Bitcoin all-time high that we set in this cycle, we can actually see that this coin days destroyed metric actually flashed pretty much at the exact cycle peak. And not just at that point as well, we can see as Bitcoin first surpassed $73,000, $74,000, it flashed, and then again as we first surpassed $100,000. So all of these signals actually worked incredibly accurately for calling the cycle tops throughout this cycle. And again, I'm going to reiterate, it's easy to say this in hindsight, but relying on the on-chain data, the supply and demand economics does work. It still is working. We maybe just need to change the lens that we're analyzing the market through. And another way we can really visualize this is if we look to the spend output profit ratio, which again, we could see big clusters of profit taking throughout this cycle, which again, may have indicated that a market cycle peak was occurring, but this isn't necessarily the easiest metric to actually take into consideration. We're seeing huge spikes violently to the upside. We're seeing capitulation events throughout the bull market as well. So it maybe isn't the cleanest signal. So one thing that I've actually been looking towards, and this is something we've outlined many times throughout our site subscriber reports, is if we just go back to TradingView here, if we actually analyze this on a 28-day rolling basis, so a monthly change within the spend output profit ratio, what we can see again is this actually marked the cycle peaks much cleaner, much more cleanly. You know what I'm getting at. We can see as Bitcoin first again surpassed $73,000, $74,000, this is when we had a big spike and peak in the monthly spend output profit ratio, again above 100,000, and again as Bitcoin crossed $120,000. Again, not necessarily the exact cycle peak as we flushed up to the upside one last time, but again, if we look at Bitcoin versus the S&P 500, for example, we can see that that wasn't actually our peak in terms of purchasing power. If we look at Bitcoin priced in other assets that people are investing in, then it gives us a much cleaner indication of the true power and strength of Bitcoin. And one way we can visualize that as well is if we just go quickly back to Bitcoin Magazine Pro, and this is just a sneak preview of the industry report that we sent out just yesterday, and that is looking at the Bitcoin relative cross-asset strength. Because of course it's easy, as I said, to look back in hindsight and say Bitcoin priced in gold actually peaked last year. If we just scroll up, we can see it's down over 50% since that peak in December 2024. But if we start analyzing the market, looking at true purchasing power rather than measuring versus a diminishing fiat currency, which is just inflating away our purchasing power, then it does give us a much better indication of where the market may be going. And one final metric we can look towards, which again is something we've outlined many times in our weekly industry reports for site subscribers, is if we look at the retail capital momentum. So this isn't necessarily and strictly a Bitcoin data point. This is actually looking at the cryptocurrency market as a whole, and it's looking at the dominance of stablecoins within the cryptocurrency markets and the changing in strength of those. So that might sound complicated, but essentially when this is wicking to the upside, when we get these red values in this upper region, this is actually pointing towards a huge amount of investors flooding into more speculative, volatile, risk-on assets within the cryptocurrency markets. And when this is to the downside, it actually indicates the opposite. I'll just go back to the Bitcoin USD chart. When this is down in the green areas here, it indicates the opposite. It indicates people are rotating out of speculative cryptocurrency markets and they're actually going into stablecoins, safe haven assets. So when we see a huge flood into these fiat pegged stablecoins, this gives us this retail capital momentum indicators to the downside, which again, we can see looking at these upper red values did indicate a majority of the cycle peaks this cycle, especially when measured in true purchasing power terms. And we can see right now it's actually giving us a low value, a low indication, giving us some indication that people are really putting their money where their mouth is when it comes to the extreme fear we're seeing, the incredibly bearish sentiment. We can see this in monetary and fiscal terms rather than just looking at social media sentiment, for example. So I think we argue a little bit of a bounce, but ultimately, do I believe that these metrics are going to continue working going forward? Yes, this is a supply and demand driven market, like all markets are. Do I believe that these top calling technical market cycle indicators are going to work well going forward? To be honest, I didn't have too much hope of them working this bull market. And as I've always said, if they are to work, great. If they're not to work, it doesn't matter. We need to react to the data that's really moving the Bitcoin market price. We need to react, not predict. And when we look at the on-chain data, when we look at derivatives markets, macroeconomic data, we can see Bitcoin changing as an asset due to the growing institutional influence. Once we paint a bit of a picture, putting all of these jigsaw pieces together, then it does give us some clearer indications of the probabilities of Bitcoin potentially approaching a little bit of a turning point to the upside or the downside. And of course, like I said, it's easy in hindsight. I'll hold my hands up. I definitely didn't call the market cycle peak as it was occurring, but I was saying at certain points, especially as Bitcoin was setting these big all-time highs, that the market was potentially overdue a little bit of a cool-off. And while my own personal system was relying on a number of these on-chain data points in combination, looking at the spend output profit ratio, funding rates, value days destroyed, etc. And because of that, my approach, again, didn't necessarily point towards a market cycle peak occurring. Maybe I was slightly overfitting. Maybe I was slightly relying on historical patterns that we'd seen that weren't necessarily going to appear once again. So it's definitely something I'm going to be looking into more, researching and developing new metrics that I'm sure are going to work and be viable long term, like we could potentially see with the MVRVZ score looking on a 6-month rolling basis rather than an entire history or a 2-year, for example, which seems to be working well. I'm going to be looking at all the data I can to really try and nail down an approach that isn't just historically proven to have worked well, but has a much, much higher chance of being considerably more accurate than the existing models we currently have today going forward indefinitely. So just to summarize, a lot of the metrics many traders and investors were looking towards to help time the Bitcoin market cycle peak unfortunately did not flash this cycle, leading many to believe that the data is broken. But of course, I don't believe that, and I might be a little biased. I'm looking at on-chain data all day, every single day, but we can now see in hindsight that a lot of these metrics really did work, although there is of course always room for improvement. So we can see by altering a number of the existing metrics that we have, we can make them even more accurate while increasing the likelihood of them remaining viable going forward. And that's going to be my ambition over the coming months, to make sure that we can change and adapt these metrics, potentially create new ones that will work incredibly well going forward. Maybe even look at different ways that we can price Bitcoin. As I said, if we look at the Bitcoin USD charts, it's slightly different, and we've had a big divergence compared to the Bitcoin's raw purchasing power charts when measured against equities or commodities like gold. So I think, again, we need to maybe take a step back and realize that Bitcoin is an evolving asset, and we need to measure it a little bit differently than we historically have done. But one thing I've said a million times, and I'll always stand by, is react to the data. Don't predict, don't rely on these top calling metrics like the pi cycle top. Of course, if it crosses, take action, react. That'd be great. But realistically, it didn't matter if we were seeing signals at $126,000 or $226,000. Once we start seeing the signals of a market cycle getting overheated towards a peak, we have to take action. But as I said, I'll continue to do some research, and hopefully we can come up with some great tools to actually try and identify the best periods to actually start scaling into the market now that it looks like we've seen a Bitcoin market cycle peak. As always, I hope you enjoyed this video. As always, let me know your thoughts below in the comment section and on social media, not only on the tools that you've seen here, the tools you'll potentially look at using going forward, the fact I'm not wearing a cap or accidentally shaved my beard off once again. Whatever your thoughts are, let me know. I look forward to reading and replying to them. As always, please subscribe if you haven't. The vast majority of our viewers aren't even subscribers to the channel, so leave a like, subscribe, all that good stuff. Check out the Black Friday deals we've got going on, standard sales pitch, etc., etc. Thank you all very much for watching, and I'll see you in the next one.